how many times Ewok talked about it earlier, like people with that mindset, even if they get that money, they'll lose it. How many times have we seen NFL stars, NBA stars, whatever different sport that just cash in on a big signing bonus and their life is just totally ruined and they're like out of the league in a couple of years,
Or even lottery winners, same thing.
Yeah. Yeah.
That's the answer right there. That money is not the freedom that it comes with. Freedom is the knowledge and then the habits that you built up. That's what freedom is. A lot of people, these NFL players, these lottery ticket winners, they'll go from 0 to 5 million, but they never learn the principles that got them there, got them to that money. And if you as an individual do not learn those principles, learn it early on, even if you get lucky and you cash out at the top and you're able to cash out $2 million, you would lose that. I promise you. Money always goes back to the hands of those who understand it. Always. That's why when people say, "Oh, we could just print billions of dollars and give it to individuals as stimulus," it's literally what happened freaking 2020.
Mm-hmm.
They printed a whole bunch of money. It went to the brokies, and then those brokies spend it on the very same assets that appreciate the stocks that the wealthy own. It always goes back to the wealthy.
Yep.
So take those lessons and understand that you want to extract money from the system, from your job, from your business, give value, spend on your life, whatever that may be, and that excess is your freedom. You move it over out of USD into appreciation assets. For me, I'm 99% PulseX. For you, it may be something else. Whatever that is to you, this is a crypto podcast, so I'm going to speak on behalf that 99% of my net worth and whatever excess cash that I have from my income goes into PulseX, because I've done the research, I've done the time, I understand that what money is and what money is not, and I understand that over time, due to supply and demand, the price of PulseX is a higher probability that it's going to go up rather than a higher probability that it's going to go down. That is the bet that I am making on myself and my decisions. People have to come to that conviction on whatever it is they decide to put their money into.
And we can let you go after this if you're up on time, but that's a fascinating thing about PulseX too, is like, for as much as people, and I'm not saying they're wrong or anything, but as much as people are like so bullish on exactly like, we'll do a 10,000x this cycle, and again, the short-sighted thinking, it says something too, that even though PulseX is programmed for all these gains and the buy and burn and all that stuff, it also is actually a very conservative investment in your eyes. And what I mean by that is just that, like, you have no qualms about dumping everything into PulseX, so the fact that, I shouldn't say fact, but the idea that we could have such outsized gains from it over time, but it's also, you can sleep, easily at night knowing how much you're pouring into it. Where do you find that? You know what I mean? That's just not that's just not something that's out there.
Yeah, honestly, I actually wouldn't prefer that we did a 10,000x, and I'll tell you why. Mm-hmm. Anything that goes up way too fast comes down just as quick. So
that's what happened with X.
It's exactly what happened. Exactly. So I like the staircase approach, because I know that, where do I get my conviction? Like, I can comfortably sleep at a 90% drop. Well, because I know that that 90% drop is still much more than the worthless currency that USD is.
Yeah.
Right. So that's where my conviction comes from. If I have, I don't know, $3 million net worth and it drops to 300,000, that 300,000 is still worth more than the inflationary paper had I just left it in the bank. Mm-hmm. And I know that eventually that's going to recover. Right. It's going to take some time, maybe a year or 2 years after the bottom hits, but it's going to recover. But that is designed to be the hedge against the worthless piece of paper that USD, that what my job pays me in, what everybody's job pays you in. Right. So that's where my conviction comes in. That's why I'm not afraid of 90% drops, because I know that even at a 90% drop, that asset is worth more than the paper that is transacted in the economy. Okay. And then part two, it's the whole concept of, yes, 10,000x. That's relevant for someone who wants to cash out and then go back to USD. But that just tells me that they're a gambler, or they don't value, real assets. They're trying to escape crypto. Maybe they're trying to get out of the game. They're trying to do whatever it is. But the point is that they value USD more than long-term store of value. And that's what I see with PulseChain, Hex, and PulseX, is that it's not just a hedge against the US dollar. It's where I'm going to store my lifetime's wealth. Right. And I think a lot of people don't see that. Back, 60, 70 years ago, that concept was real estate and stocks. They worked every single day. They went to work and then they stored their wealth in those assets. To me, it's the same principles. The only difference is I'm storing it into modern technology that isn't probably as, popular as stocks and real estate. That's the only difference. But why do I not fear it? Well, because I put the time to understand it. But more importantly, I took to understand what money wasn't. That's the most important thing. Money isn't a store of value. USD isn't a store of value. USD is just a form to transact with one another. But true store of value is anything that's a hedge against the dollar. Right. So then that's how I can sleep at night peacefully, knowing that there's a 60, 70% drop, because even those 60, 70% drops are going to be worth more than the inflationary paper. And then two, that massive run up, I mean, it's just going to come down just as fast. And I think that's going to hurt a lot of people financially, because they're going to have certain expectations, or, they're whatever it may be. And I think it's just going to create a massive divide on, oh, this is a scam, this is blah, 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 blah. And they never actually learned what they were holding. They were just speculating. Now, yeah, I mean, great. If it does a 10,000x, I mean, I'm not going to complain. But someone like me, who has such a long-term vision and who thinks of lifetime store of value, even extracting all of that at once would be very questionable to me, because I would just be going back to paper. And yeah, you can make the argument, oh, you can sell at the top and then rebuy at the bottom. Man, that's trading. I'm not a trader. I can never time that perfectly. I'll end up losing money. So that's why, it's better for me to just sit back, relax. Whatever happens, happens. Think 10 years out. And in 10 years out, my bet is that it's going to be higher than it is today. And then if I need it, I'll tap into it. And if I need it immediately, I will use DeFi protocols to loan against it, right? And go about my life that way. And I think a lot of people who think that way, or a lot of people who listen to this, they're like, that's boring. Why would I want to do that? That sounds blah, blah, whatever it is that I can't really talk to them because I can't relate to their mindset, So I speak to a very niche type of individual, and I think the type of people that I speak to is very mature. They understand the realities of life. They understand what money is not, and they understand that, okay, if money's fake, I have to work anyway. I might as well move it into this. I might as well move my excess cash into this asset that's going to be a long-term store of value. That's going to be a hedge against the dollar. And then they go about their life. They have their family, they have their kids, and then they use their USD to transact in that life. But they're building their wealth over here with these DeFi assets that Richard Hart gifted us with.
Yeah, it's a good place to be, and especially with PulseX. I mean, one of the beautiful things, like the people that do get a little bit shaken up by the dips, or just the bull market not popping off yet, is just seeing that buy and burn constantly ticking up. It's cool to be able to check that percentage. As last time I looked, I mean, we're getting near 4% as far as the buy and burn right now. So it is cool to see that. And, you know, it's always good and it calms people down, I think, to look at little indicators like that and just think about things, again, in matters of time, not so much price and where the price is right now. So, you always set people straight, I think, Frank. And, you know, something that another good thing for everybody to do is like really take stock of what kind of investor or what mindset actually works for you. You know, like Frank said, like maybe you know, we know that 0.02% of the population are maybe effective traders out there, even, you know, maybe if it is long-term trading, like he mentioned too. But whatever speaks to your mind is probably going to be the best for you to invest. You know, if you are more of a gambler, if that's what you want to do, and that's something that, you know, you could be effective at, go ahead and do it. But for the most, I think I'm speaking for most people, though, overwhelmingly, it's going to be us longer term holding, like Frank's talking about here. So